Hello traders, Gary Wagner here just after 10:30 in Honolulu, 4:30 in New York on Tuesday, the 5th day of August 2014, and this is the daily report for gold and silver. After trading in positive territory throughout the night overseas, negative territory as the market opened up, then to go back to a couple of dollars higher. The market is currently trading in essence unchanged to down 50 cents on the day, 1287.30. That is our current print. Low on the day is 1282.40 and the high 94.70. And as I said, currently basically unchanged. You can see that by this pure doji that we have right in here, our current day's candle. So the real key and what we really need to ask ourselves is this current 61% retracement level sitting at around 1282. Is that a retracement level that is going to hold? I bring your attention to our 1 fib retracement. It covers the entire span of this rally. 61% takes us to 1280.99, so call it 1281. We had these two lows that came in last week, the low that brought us down to the bottom, and then the market that moved back up. Yesterday's activity, that's a small red candle. Of course, we saw the market moving a little bit lower on the day, no doubt. And today, we've had a range. We've had a $10 range in which it's been, $5 lower and $5 higher, but currently it is in essence unchanged on the day. So we certainly cannot say that about silver. Silver's under dramatic pressure today, trading off about 40 cents. Most importantly, as you can see on our screen, it's come down almost 2% on the day, 40 cents as I said, and it has now traded to the 61% retracement level. If you recall from yesterday's show, we said if it cannot hold the 50% 2011 and it closed right above that point, it would dramatically fall and fall to this level. We do have some real support at this level, so this is the area that we truly want to watch to see if we can find some support. More on silver towards the end of the show. So the real key to this market, as we've talked about dramatically over the last couple of days as the market drifted down below this towards the end of last week, is the fact that it's the critical area really, as far as I'm concerned, is the 61% retracement. Of course, that number itself falls in right at around, call it 1281, right in here. The lows that we saw, we talked about, and you can also see that there, if I draw the band across this, which I have, to give us a range, and the range is about 1280 to about maybe 1270. We can see areas where lows have drifted into this area, but the real bodies have in essence remained above this point until we had the dramatic fall to 1241, and then of course the subsequent rise back over that point. To me, this is a critical point. If in fact we see the market holding this area, my sense is that we're building a base in this area. We've concluded the last of our wave 3, and we will begin to move into an impulse phase. The impulse phase, as I said, is going to be composed of a number of waves, but for right now, the critical activity we have to ascertain and we have to see if gold can accomplish is to form a base and hold above this current level. It's trading at roughly 88. The market's roughly where we got in at, and we see that the price structure has been really bunched around this particular price, this $10 range that you can really see with this one doji. So let's make the assumption here, and it's a pretty big assumption at this point, but it's the assumption that we're working on, that this 61% retracement level is going to hold. If that's the case and the market begins to form a base and move higher off of that base, where can we look for? What are different specific areas that we can look at that will probably provide resistance in the marketplace? And this is my take or my sense on that. First of all, the 50% retracement is a minor retracement level, and our current moving 14-day moving average is right around 1,300 per ounce. I want to draw this line across as straight as I can. You can see that there's no real activity. It just kind of melts through these different points. But if we go back in time, we can see a series of tops in the market. Those tops are right here. And so I believe that we could see resistance at 1,300. and real resistance at 1311. 1311 has been a number we've looked at before. On a fib level, it's a 38% retracement, and so that's why that's important to me. So let's make the assumption that the market finds a base here and begins to track higher. If it does, I don't see any issues in it going through 1282, but between 1300 and 1311 is where I think we could run into some resistance. Now, we have converted our daily candlestick into Japanese average. You can see that we had that doji yesterday. We talked about this as really a pivotal point, but what you really want to see after this pivotal candle, that's right in here, but what you want to see after this kind of a pivotal candle is the color change to green to signal that the market's moving up. Now, we are trading below the midpoint of yesterday, and that's why we're getting this red candle even with the market unchanged. That's one of the key distinctions, but it's not telling us that this market has bounced off of support and began to move higher. If anything, you've got small body sizes, so we're still looking at pivotal moves in the market, but we have not seen a key reversal up till now. Now, as far as silver goes, of course, we're maintaining our long position in gold. We're maintaining our current stop level in gold. However, in silver, we've been absent and flat from the market because my sense was that it was going to begin to or continue to move lower. When we look at this market currently, as we go into the close of the day, or the break, I should say, of our 24-hour market, of course, New York is closed, we are trading at and below the 61% retracement. If it falls below it, the next real level of support doesn't come in until 1934. And I really want to see how it reacts, because if it's going to find some support somewhere, this is the first logical place to look at it, just as we looked at gold trading to the 61% retracement when we considered this most recent rally and decline. 61% is a logical point, which is around 1975, and that's really where the market's trading at. So we certainly have no confirmation that we're at a bottom in silver. We don't even see a base being formed because we have these consistently lower prices, and we've got larger moves coming into the market than we've had on these subsequent days. The fall is more dramatic. Now, that, of course, is in conjunction with the fact that the equities markets is under pressure, and silver has that high level of industrial component in which we see it move with the equities markets giving it some bullish momentum, and when the equities markets are under pressure, some bearish momentum. The opposite holds true for for gold, because when we see the equities markets under pressure, we see safe haven buying coming into the market, moving into gold. So in that way, we see some real distinctions between gold and silver, and that's why we're remaining flat in silver, and we are maintaining our long position in gold and our stop. This has been Gary Wagner, wishing you as always good trading. We will talk to you tomorrow for another daily update and review. Bye-bye.